Welcoming our closing keynote speaker, Ron Suber, the president of Prosper. Hey, buddy.
Thank you. What an honor it is to be here today. There's only one word that describes what happened here today and what's happened to all of us this last year. And that word is wow. For those people watching on the LendIt channel now, live today's LendIt program, and who will be watching today's presentation and tomorrow's conference on YouTube, rest assured that those of us here today, those of us in this room, can feel the excitement. You can hear it. There were literally 60 press releases in the press packet this morning about announcements, new platforms, new money coming to invest in the platforms and buy the loans that the marketplace lenders and the peer-to-peer universe is producing. So many people here from around the world. It's amazing. And the fresh faces and energy that are in Startup Alley are inspiring. They're much of the future of what this industry will look like in the years to come. I want to do a couple things today. I'm not going to talk a lot about Prosper. Most of you know the Prosper story. We reached $3 billion a few weeks ago in record time, just months from $2 billion to $3 billion. Many of you saw our announcement in our fundraising last week, our record first quarter, and our funding, providing new capital and new strategic partners to Prosper. I want to do something different here than you've seen today. I want to try to tie this all together for everyone in this room. I want to address what we've read in the Financial Times and CNBC, hit some of the points that Jamie Dimon posted in his letter, and talk about the points that the CEO of RBC talked about on Reuters on Friday. So we're going to take a look back. We're going to talk about where we are today, and we're going to take a look in the future and talk about what's ahead, the challenges, and the opportunities. And I think the best way to start this presentation is to talk about how people respond to innovation. How many people remember the first time they received a phone call from somebody with one of these in their hand and they said, "Guess where I am right now?" This is the way innovation starts. It's a novelty. It's the first cutting-edge user of anything. And then in all innovation, it moves to something that looks like this. There's some wide stream mass adoption. It does more things in the second generation than the first generation. It's smaller, it's faster, it's smarter, it's better looking, it's innovated and iterated. That's happening to all of us too. The third phase of innovation looks like this. It becomes this great idea, and almost everybody has it. It's almost everywhere, and it does so much more than the first and second generation of iteration. And then finally, innovation looks like this. It looks like this device you cannot believe you lived without. It does things you can't imagine a device could ever do. And that's what's happening to all of us here today. We are graduating, we are growing up, and we are iterating and we're maturing as an industry. It's not easy. It's full of challenges and opportunities. I get asked the question all the time, where are we now? What inning are we in? Well, we're right there. We're right in the middle of an interesting new niche for our industry and this great idea. And today we're going to talk about what do we need to do, each one of us in this room, to move further to the right, to become this thing that people can't live without. We're on our way. We share three common goals. Every single platform, every single investor, every single technology firm, three things every single one of us share. It is that we are all trying to do this. We're trying to change the way people invest, and they borrow, and they pay for things. And we're also trying to provide convenient, cost-efficient access to capital with a great customer experience, a different customer experience, as big of a change in customer experience as Uber did to transportation and Airbnb did to lodging. It must be different. And the good news is the experience that we're providing in marketplace lending is different. And when people try us, they rarely go back to the old way. And for investors, a critical part of marketplace lending, we're trying to provide the simple, direct access to assets with an attractive, risk-adjusted yield. That's it. This is what we're all trying to do. And by all of us focusing on these goals and executing on our business plans, and I'm going to focus on execution because that is what this is all about. We can all issue press releases and talk about the great things, but without great execution and following these three common goals, it's not going to work. We are making history together, and we're going to talk about that in a minute also. How far have we come since being here 2 years ago at the first LendIt conference, and then 1 year ago in San Francisco, and now today? Some industries have growth, and the lines look like this. I would take that line. That's a great line, but that's not us. That's just the growth of the S&P 500. It's done pretty well, but that's not you, and that's not us. Look at this line. This line looks even better, but that's not us. That's the smartphones activated around the globe. And guess who this is? That's you. That's us. This is the combination of education and awareness and understanding of what we're doing. It's new platforms. It's new verticals, not just in consumer credit, but in small business loans, in student loans, in mortgages, in franchise finance, and all these other verticals coming to us. This line, this progress, would not have happened without everybody here in this room and many people watching the LendIt TV station now live. Because you poured yourselves, you poured your heart and your money and your time into making this industry what it is and what it's going to be. And so I would just like to take a moment and congratulate everybody on reaching this point in our industry. So 2 years ago, I talked to almost everybody in this industry before the 300 of us got into the room at LendIt, #1. And I said, what are our big, hairy, audacious goals? What are the things we can put up on a presentation and dream about? I mean big things, our moonshot. What are the things that we could say, we can do this, but it's going to take time? And we put up 9 things. These are not my 9 things, these are ours. What did people say when we told them one day we were going to go to the moon and do these 9 things? They said, you're crazy. And they said, that'll never happen. And some even said, we're stupid. Well, I know most of you, and many of you are really crazy. But we did it. 2 loan securitization happened in the first quarter of this calendar year. One was rated, one was unrated. These bonds, these loans, these products that we are producing are now trading well in the hands of sovereign wealth funds and banks and the largest asset management, institutions, insurance companies. We did it. We got rating agency approvals. Moody's rated the biggest one ever. And there are more coming, more rated securitizations, more rating agencies coming to us. We dreamt that these platforms would be one day worth $1 billion. And now we have 4 or 5, maybe 6, each over $1 billion, some over $5 billion. We said we would do not tens of millions, not hundreds of millions, but billions of dollars of originations. And we are. $369 million for Prosper in 2013, $1.6 billion in 14, and over 3, knock on wood, in 15. Quality underwritings. We told people what the return expectations were going to be, what the growth rates, what the expected defaults, and the net returns. And we, as an industry, have kept the quality there, which has led to so many investors coming to us, retail, institutional, retirement around the world, because the quality of what we're doing is there. This one in particular, when we said to people, to the investment banks, to the banks, one of us is going to go public. Well, two of us have, and congratulations to Lending Club and On Deck for being the two public groups in our industry. And this is the one when people said, banks will never, ever partnership with you. Aren't they your competition? Aren't you taking their business? Don't they hate you? Well, anyone who read our release last week saw the biggest banks in the land have invested in Prosper. They understand us, and they want to partner with us, and they want to be strategic, because we have proven as an industry that we can help these banks. We can help them say yes to their borrowers. We can help them create private marketplaces. And we can help them buy short-duration credit, consumer credit, student loan credit, mortgage, and more, to help them soak up some of the cash on their balance sheets. Because banks need to do this. They need to do loans to their customers, and they need to own consumer credit. This network effect, it's happening both on the investor side and the borrower side. And it's really just beginning on the borrower side. When I get on airplanes and the doors close and I know nobody can get off, I ask people, have you ever heard of Lending Club or Prosper? And the answer is not really. But one day, that network effect, people will know who we are. And this thing called E-A-N-U, it's education, awareness, and understanding. It's our real competition. It's not each other. It's not the banks. It's this, that people still don't know who we are. And we're going to talk about all of these points going forward. So let's get started. Let's review the three legs of the stool we all stand on. And I mean every single platform. Whether you're an investor in the equity or an investor in the debt, whether you're running a platform or you're building a platform, draw a picture of a stool, because this is it. This is the key. This is what Aaron and Steve and I have learned, that a three-legged stool with balance is what's required to run an efficient marketplace lending platform. I want to talk about our challenges. Where is our industry today? Put up some BHAGs, some big, hairy, audacious goals that hopefully Peter will put up in 2 years, and see if we can get there. And I want to share with you the one thing I know today that I did not know standing in front of you in San Francisco 1 year ago. This is who we are. We're three-legged stools. It's that simple. And when we see marketplace platforms, a lot of times one leg is too small, or one leg doesn't exist, or one leg is bent or broken. What are the legs? I used to think this was a two-sided business, just with borrowers and investors, or product and capital, but it's three. The right leg is the product. It's the thing we produce. So for Prosper, it's consumers. For On Deck, it's small businesses. For Realty Mogul, it's real estate. For Common Bond and SoFi, it's student loans, and SoFi does mortgages. And for Apple Pie, it's franchise finance. You get the idea. There's all kind of product. And what we need to do is, with the low cost per acquisition, find the product that fits, find the borrower that fits, that's easy, that we meet the needs, with a great customer experience, where they want to come back a second time. And we need to continue to innovate and come up with new products. We cannot just continue to do the same products. We have to iterate and come up with new things. And the left side, it's the money. It's the capital. It's what fuels the marketplace. It could be retail. It could be institutional. It could be borrowed from a bank or balance sheet. But this is a critical leg. And it's not just having money, but it has to be diversified with a varied risk appetite, or you end up with perhaps the A's and B's not funded, or the D's and E's not funded. You need to find money that wants all the stuff you produce that you can validate and verify, that's ready when you're ready. It's no good if the money's there 2 days after the borrower's loan expires. And it should be permanent, in quotes, because someday the money that's investing us will find some other shiny object. And we're going to need to have permanent capital and money that's here for when the economy changes and the risk-free rate of return changes. And this is the leg that you all should focus on. This is the inside. This is pricing and credit and underwriting and servicing and collections. It's validation and verification. It's us having predictability of the returns and the losses. And it's got to be repeatable. It can't be great one quarter and not so good the next quarter. Tyler Smith talked about conversion and mobile. It's all about getting borrowers to the top of the funnel, activated and converting to actually make a loan. It's no good if you find the borrower and they don't convert to an origination. And it's about compliance. And we're going to focus on compliance today. SEC registration, state registration, lots of press here today, but also lots of regulators. So we're going to talk about all three pieces of the three-legged stool, and they're all important. I know platforms that have two, and they're struggling to get one. It's this picture that's clear. Yes, so many opportunities, so much excitement. We have challenges. Our challenges this year are different as an industry than they were a year ago. It's about sustainability. It's about getting to scale and maintaining scale. It's about rewriting our programs and improving the things we do in data security and servicing and all these other areas. It's about product and technology innovation. These are our challenges to do more, to do better. And how do we differentiate ourselves from the others, the banks, the financial firms, and the new firms coming? These are challenges. And not one company has a national brand yet. It's wide open. No one's taken the poll. And that's a challenge. Can we have a national brand or a series of national brands? That's our challenge. So this is what's coming. This is the scary stuff. It's not if this is coming. It's coming. It's just a question of when. There will be an economic downturn. This gray hair is not from my two kids. It's from being 50 years old and being on Wall Street for 20 years. Everything is not always up to the right. We will see a rise in unemployment. It's great now. Servicing's easy. Not a lot of defaults. People are paying. It's not always going to be like that. Yes, interest rates will rise. The risk-free rate of return will change, and our investors will have something else to consider to get yield. Information security. I cannot stress this enough. It's one of the things that Aaron and Steve and I have invested in excess, making sure our data, our systems, our walls are secure so that the borrowers feel secure and the money feels secure. And this is something a lot of people ask me not to talk about today, but it's the elephant in the room. What we're doing is hard. It might look easy, and someone might tell you it's easy, but it's not. It's capital intensive, and those three legs of the stools change. There will be failures of platforms in our industry. It's natural. It's okay. And we have to be aware and be ready and be able to explain for those of us still in this business why, as a natural course of business, a platform failed. We have seen platforms launch and fail or fail to launch. It's not over. This is not easy. It's going to happen, and we need to talk about it. So how do we deal with all this stuff that's to come? What's the answer? This is the first thing. We're hiring more than 10 people a week at Prosper because this business is about the people, your partners, the people we can bring to the marketplaces. Marketing people, capital markets people. The number of resumes we have from Wall Street is staggering. They want to be with us. Engineers, programmers, coders, ratings people, securitization people, leverage people, all kind of accounting people. We need to focus on this to make our industry stronger. This is a data business. It feels like marketing, just spend money and find the borrowers, but it's more than that. We need to be smart, and we need to have data, both in the credit side and in the analytics side, to have the right cost per acquisition and return on investments for the dollars we spend because of the data. And the analytics that come off the data, whether you use Tableau or some other system, you must get the data and understand what is it telling you. Where should you be spending your money? Where should you be marketing? Which borrowers are performing? This is critical. It's about professional self-governance. We need to govern each other and govern ourselves. And it's about having key performance indicators as an industry. There are many for each firm. And I talk to lots of different companies, as Peter said. And I ask them all the time, what are the 3 things that are your KPIs? And lots of people don't know what they are, don't have them. We must establish them to grow and be profitable and get to the next level. And just like Uber and Airbnb, this is about transparency. It's about quality. It's about that experience. We've done a great job. High net promoter scores, a great experience. We have to keep that up. Technology. There's all kind of new technology, new data systems, new data hardware, new language programs. We have to keep investing and rewriting and getting our platforms to be the best technology platforms in financial technology. And a repeatable process. Again, you can't be great for a quarter or for a year. This is not a sprint. This is a marathon, and we're early. And it's about automation. It's about removing the manual process. It's about having machine learning and big data and having the ability to do things in an automated way so we can scale. So where are we now? Here are 8 things that are happening today. Access and distribution is changing. We're now starting to see in Europe exchange-listed funds that Europeans and people in the UK and London can buy in their brokerage accounts a symbol, a stock. And that symbol in their account over there is buying loans from platforms around the world and the United States. So access and distribution is changing the way people invest in these products. You're going to see it here. It's coming. It's coming this year. Access and distribution will continue to change. The days of a person opening up 5 accounts at 5 platforms and wiring money and getting 5 1099s, it'll be over one day because distribution will change. It happened in the business Aaron and Steve and I were in prime brokerage. It's coming to this business too. And point of sale. We, as marketplaces, are moving closer to the moment the person wants to buy. Not just borrow and debt consolidate, but that moment where they say, how do you want to pay for this? Credit card, PayPal, cash, check, marketplace. It's coming. Loan selection. When we entered this industry, Aaron and Steve and I, just 26 months ago, it was active. It was fast. You had cherry pickers coming in and re-ranking the platforms. But it's changed. The majority of investors that I know that are getting scale are coming in passive. They're trusting what we're doing. They want a beta trade. They want to passively index the whole platform. Those days of coming in and looking at each one and trying to figure out which one they can do better than us, as we improve, that goes down. Passive investing. More leverage providers. The biggest of the big. They've done the work, and they're coming. The best, international, domestic, traditional banks, Wall Street. They are providing leverage to the institutions buying our loans. And securitization. Some people like it, some people don't like it. Today, it is the secondary market. It's the way institutions can buy our loans, put some leverage on them, rate them, rank them, and then repackage them and sell them to others who didn't come to us directly. Refresh their capital and come back and do it again. There is no choice for a platform anymore to say, I don't want to do securitizations. The investors have spoken. They've seen the success, and we're going to see more of it. One day, the securitization window will be closed. Today, it's open. One day, we might have a secondary loan trading program. It doesn't exist today for whole loans. This is here to stay while the window's open and while we support securitization. Again, building brands. I see the day when there's a NASCAR with a marketplace lending. There's a blimp over the Rose Bowl. There's more than just SoFi ads in the train station. There'll be national brands, and people will see us everywhere. So someone asked me not to put these last 2 boxes up here too, but I did it anyway, because we have to talk about it. Are we ever going to have a secondary market? Is there enough money in it? Does anybody really want to sell their loans once they buy them? I don't think so. And I put a question mark here, not because I know the answer. It's not that someone can't do it, but is it big enough? Does anyone really want to do this, spend the time and the money and the brain damage to build this secondary market? We're not ready for it because we don't have the same rules and regulations and policies with all the other platforms to trade these. This may be a ways off. And this last one is not directed at any one firm or any one company or any one person here today. I just want to caution this industry. We have a great thing here. And if we allow derivatives and the financial engineers of Wall Street to take over this quality product and do what it did to the mortgage industry and the CDOs and the CLOs and all that other stuff from 07, 08, 09, we're going to give it away. And so if it's done right, with data and control, that's great, because it will bring liquidity. It will bring people's ability to get exposure to us, to hedge us, and to adjust their portfolios. But I put a question mark here, not because I don't like the people talking about it, but I caution us. It could be the end if it's done wrong. This is it. This is the slide I hope Peter puts up in 2 years. These are our new, big, hairy, audacious goals. I didn't come up with all of these. I talked to many of you. Yes, I texted a few of you, or a few hundred of you. I sent a few of you LinkedIn messages. And this is what everybody said. This is our moonshot going forward on behalf of the industry. Universal standards, the accounting industry, the tax industry, the audit industry, the leverage industry, the securitization industry. They want us to have uniform standards. Not the same pricing, credit, and risk, and the same letters and numbers, but to be more uniform. So for us to grow and for us to scale, we're going to have to create some uniform standards. The securitizations that have happened so far have been rated BBB plus or minus, pretty good. Can we ever get a AAA? Probably not, because we do have some defaults. Some people are shooting for an A-rated securitization in the next quarter. Let's see if in the next 2 years we can get to a AA or an A. It comes from quality. It comes from control. Multiple rating agencies. Imagine a day where one of the marketplaces produces a bunch of loans, and an institution invests in them, and 2 rating agencies put a rating on one securitization. It could happen. It happens elsewhere. Maybe it will happen to us. There was a great conversation in one of the banking panels earlier today about this next thing. It's about banks and capital and risk-weighted assets. So banks are buying loans from us, from our industry, from Prosper, from marketplaces. And banks are holding our AA's and A's on their balance sheet, owned by the bank to own consumer credit. And it now sits on the 3rd tier. They have to hold some capital against it. It's a good asset, short duration, it pays. The regulators get it. Can we get our product on the 2nd step or on the 1st step inside these banks as fantastic capital, like cash and like treasuries? Well, we can. We just have to keep the quality there. This listed vehicle in the US, it's a home run. Whoever does it is going to make a ton of money. Again, there are 2 in London, and we're working with the industry to create a stock in the United States where if I go to my Schwab account or my Wells Fargo or JP Morgan or Fidelity account or my Wealthfront or Betterment account, and I see my pie and it says 60% equities and 40% fixed income, there'll be a stock I can buy in the fixed income category that says buy peer-to-peer, buy marketplace loans. I'm looking for debt, short duration credit that pays 60 or 70 basis points a month. This is it. I think we can do it this year. We're heading there. So this next one, it's not a press release about some small deal with a bank. I'm talking about a really big partnership, an integrated from the top down relationship with a top 10 bank. We're all working with the banks. We're all working with the big banks. JP Morgan invested in us last week. We get it. I'm talking about a big relationship with a bank. We have not seen it yet. We didn't see it today. We didn't see it last week. But it's going to happen. And mainstream adoption, it is that moment I go on the plane and they all know what it is. We heard the Asia panel just 30 minutes ago, and they talked about doing $10 and $20 billion in 1 year. This is our challenge. Can we get to the day when platforms don't do 1 billion in a year or 5, but 20? So what is that one thing that is so clear to me today that our new Chief Marketing Officer, Cheryl Law, taught me since she joined Prosper? And it's this, that there's nothing more powerful than our customers in our industry that are happy. They tell their friends, they refer their friends, they rate us on LendingTree and Credit Karma and all over the place. They post videos of us and pictures to tell their story. Go to Facebook and look at Prosper. I promise you, you will cry when you see the stories these people post about how we are helping them in a big way. Because our brand, your brand, it's not what we say it is. It's what consumers say it is. It's what they tell each other. So how do we do this? How do we get happier clients as an industry? It's about superior product, a great experience, returns that happen as expected. It's about transparency. It's about not putting in extra fees in other products they aren't expecting. This is how Uber has kept it. They do one thing. They don't sell you insurance and other stuff when you get in the back of that car. They do one thing, and it's transparent. What they do and how much it is. Speed. The speed to funding. When borrowers come to us now, they're getting their money on average in 3 or 4 days, down from 9 and 10 days. It's raising their ability to come to us, not once, but twice and a third time. And this customer experience, if we get it wrong, they're going to tell our friends, and we're going to see a decline in marketplace lending. And we have to not only be transparent, but we have to be fair. We have to be fair to both the borrowers and to the investors. So our industry is reaching this thing called escape velocity. And this is the speed we need to break free, not just from gravity, but from the naysayers and the haters and the doubters who never thought we could do what we're doing here together, collectively. It's breaking free from the old way and the incumbents. Because what we're doing here today, what we're doing here together, is one star in the system. Everything on this page is changing. The way we transfer money, the way we pay for things, personal finance, wealth management, banking, and lending. It's all changing. It's this huge secular trend. And we are just one piece of this whole ecosystem that's related. So many of you know, for me, this industry is personal. It's not just my job. It's my passion. And I'm honored to be here today. Thank you.